Good morning. The year 2025 began with a seismic shift in American foreign policy, marking a new era of assertiveness and economic nationalism. The Trump administration, back in power, launched a full-scale economic offensive under the America First doctrine, a strategy aimed at reshaping global trade dynamics. The goal was clear: reassert U.S. dominance and force allies like Japan, South Korea, and the EU to pay what was framed as a long-overdue debt, a move that would redefine international relations. This was no longer about partnership, it was about primacy, a bold declaration that the U.S. would no longer settle for anything less than the top position. The administration argued that globalism had hollowed out American industry and only a radical reordering could fix it, a sentiment that resonated with many who felt left behind. The plan was ambitious: use the leverage of the U.S. market to force key industries to relocate to American soil, thereby revitalizing domestic manufacturing. To Americans, it was a promise to bring jobs home, a vision of economic revival that many had longed for. To the world, however, it looked like an aggressive rewrite of international trade rules, a move that threatened to upend established economic systems. The message was blunt: invest in America, move your factories, or face consequences, a stark ultimatum that left little room for negotiation. This approach transformed alliances into hierarchies, with the U.S. firmly at the top, dictating terms to its allies. The gamble was that allies would comply rather than break ranks, a risky bet that assumed economic pressure would outweigh political resistance. But the economic offensive of 2025 would trigger the very fragmentation it sought to prevent, leading to a more divided and uncertain world. The administration's primary weapon was a sweeping 15% tariff on all goods from the EU, Japan, and South Korea. This was not a selective measure but a blanket policy that sent shockwaves through the global economy, targeting some of America's most important trading partners. These were not targeted duties but a broadside attack on America's closest allies, levels not seen since the 1930s. The echoes of past trade wars and protectionist policies suddenly felt very present, raising fears of a return to an era of economic isolation. Emergency powers bypassed Congress and international protocols, signaling the old rules no longer applied. The administration acted unilaterally, leaving lawmakers and diplomats scrambling to respond to the new reality. The tariffs were designed to inflict maximum pain and force immediate concessions. Factories slowed, supply chains buckled, and the threat of further escalation loomed over every negotiation. Japan's auto industry and South Korea's electronics faced devastation. Germany's automotive sector was crippled. These industries, once global leaders, now faced an uncertain future as orders dried up and production lines stalled. The U.S. forbade retaliation, undermining the World Trade Organization's core principles. The very foundation of international trade cooperation was shaken, as rules meant to ensure fairness were openly disregarded. Allies were forced to choose: accept economic subjugation or risk a trade war with their security partner. Behind closed doors, diplomatic relations grew tense, and trust between nations began to erode. Stock markets tumbled, businesses froze hiring, and investment plans were slashed. The uncertainty rippled through boardrooms and trading floors, leaving investors and workers alike on edge. The tariffs became a tax on the very idea of a stable global economy. Every container delayed, every contract canceled, was a reminder of how interconnected and vulnerable the world had become. Long-standing trade relationships destabilized overnight. Agreements that had taken years to negotiate were suddenly worthless, and trust between partners was shattered. The era of frictionless commerce among Western allies ended abruptly. The world watched as the pillars of global trade, once thought unshakable, began to crumble. The shockwave forced companies to question the viability of decades-old supply chains. As uncertainty grew, businesses everywhere were left to wonder what the future of international trade would look like. Beyond tariffs, the administration imposed forced investments, hundreds of billions channeled into the U.S. on Washington's terms. Critics called it financial colonialism, sovereign nations treated as economic vassals. Japan was ordered to invest $550 billion, with Washington dictating where the money went and offering meager returns. The EU faced similar demands, over $600 billion, plus requirements to buy overpriced U.S. gas and military equipment. Negotiations were ultimatums: take it or leave it. Europe's dependence on U.S. security left it with little leverage. South Korea faced heavy-handed tactics, including high-profile raids on Korean-owned factories in the US. These actions were clear warnings: comply or face consequences. The combination of tariffs and forced investments made the alliance transactional, not equal. Economic submission became the price of American protection. The old partnership was gone. In Japan, US demands sparked outrage and mass protests. The government collapsed under pressure, accused of capitulating to American bullying. The crisis shattered the consensus that unwavering alignment with Washington was the only path to security. For the first time, mainstream voices called for a more independent foreign policy. The BRICS alliance, once unthinkable for Japan, now seemed a viable alternative. The American economic offensive meant to bind Japan closer, instead pushed it to seek an exit. A historic pivot was underway. As the US pressured allies, the BRICS bloc rapidly expanded, forming BRICS Plus with 13 new members. This new group included major emerging economies and key Middle Eastern powers, representing over half the world's population. By purchasing power parity, BRICS Plus now accounted for 44% of global GDP, surpassing the G7. The bloc condemned US tariffs and championed a multipolar world order. For nations squeezed by US policy, BRICS Plus offered a platform based on sovereign equality, not hierarchy. The most dramatic shift: Japan, a G7 pillar, joined BRICS Plus. This sent shockwaves through the international community. Instead of consolidating power, US policy drove key partners to its rivals. Japan's entry lent economic and technological weight to BRICS Plus. The bloc gained new legitimacy, signaling a tipping point in global dissatisfaction with the US-led order. The world's economic center of gravity was shifting. BRICS Plus set out to challenge the dominance of the US dollar and build an alternative financial system. The weaponization of the dollar gave nations a powerful incentive to seek financial sovereignty. Members began trading in their own currencies, reducing reliance on the dollar. China and Russia led the way, with India, Brazil, and others accelerating similar moves. The bloc planned a new reserve currency, backed by a basket of commodities like gold and oil. This aimed to create a stable store of value, free from the whims of any single central bank. The US threatened harsher sanctions, but these were seen as signs of panic. Even G7 partners began quietly exploring alternatives and opening channels with BRICS Plus. The global financial order, once anchored by the dollar, was fracturing. The momentum for de-dollarization was now unstoppable. A new financial world order was taking shape. US economic warfare sent shockwaves through global supply chains, causing chaos and uncertainty across continents. The ripple effects were immediate and far-reaching, disrupting the flow of goods and raw materials that modern economies depend on. The promised American manufacturing boom failed to materialize. Investment stalled amid uncertainty. Instead of a renaissance, factories remained idle, and hopes for a revival faded as companies waited for clarity that never came. Companies hesitated to build new US factories, caught between high relocation costs and punitive tariffs. Many executives faced tough choices, unsure whether to risk capital or wait out the storm. German automakers slashed production, and American goods faced boycotts in Europe. The backlash was not just economic but also political, as public sentiment turned sharply against US brands. America's soft power eroded as economic coercion sparked cultural backlash. Protests erupted in cities worldwide, and American influence waned in places where it once dominated. Emerging economies like Vietnam and India, targeted by tariffs and visa restrictions, sought new partners. They accelerated trade talks and welcomed foreign investment, eager to fill the void left by American retrenchment. China quickly redirected exports to BRICS Plus markets, creating new winners and losers. Chinese companies seized opportunities, expanding their reach and influence in regions once dominated by the West. Southeast Asia saw a record trade surplus as factories ramped up to fill gaps. Local economies boomed and new supply chain hubs emerged, shifting the global balance of trade. US brands lost global market share, especially in autos, to aggressive Chinese competitors. Once loyal customers turned to alternatives, accelerating the decline of American industry abroad. Trade disputes complicated access to international markets for American companies. Lengthy negotiations and new regulations made exporting more difficult and costly. The chaos, meant to benefit America, instead accelerated its decline in global competitiveness. The world watched as the US struggled to regain its footing. Supply chains were reconfigured, but not in America's favor. New routes and alliances formed, leaving the US increasingly isolated from the networks it once led. The world adapted and moved on, forging new connections and building a future less dependent on American leadership. The events of 2025 marked a great economic realignment, shifting power away from the US-America's attempt to reassert dominance backfired, driving allies to build alternatives like BRICS Plus. De-dollarization, once theoretical, became a matter of national security. BRICS Plus gained momentum trading in national currencies and developing a commodity-backed reserve currency. Even G7 partners began hedging their bets, signaling a monumental shift in global finance. The collapse of the Japanese government and anti-American sentiment in Europe exposed the limits of US power. Alliances fractured, the world was no longer divided into simple blocks. America's economic demands disrupted supply chains, damaged industries, and eroded soft power. The world economy reorganized around multiple poles, with BRICS Plus as a formidable counterweight. 2025 will be remembered not for renewed US dominance but for hastening the end of the unipolar moment. A new uncertain and truly multipolar world order had arrived,